Let's get underway with today's session. Our main trading week ahead. We're at a record high number of people subscribed. We broke the 5,600 mark. Hopefully you're all doing well. The main things that I'll be trading next week and teaching my traders about are the oil and gold sectors. They're finally, after being sleepy as heck for a long time, our gold and oil stocks and ETFs are finally doing something that's noteworthy. And so let's take a look at those in just a second. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, and by watching this, agree to not make actual trades. Paper trade, or if you're a maniac like me, trade 5,000 times in a few months. Whatever your poison is as a trader, make it work for you and learn from our winning alerts. So let's take a look at the S&P first of all and see what it's telling us. What's the story of the stock market? Recent recovery, but sideways chop. So what do you think is going to be support? It's going to be this 50 SMA. That's what all institutional guys are using. So we've got a gravestone doji, we've got a couple of red candles, we've got a regular doji over here. Not much going on, but support is going to be right near the 2870 and resistance will be right near the 2915. We're currently in a trading channel, which is why last week was a bit quiet in terms of the trading days. Notice how the height of the key thing to look at from a volatility management standpoint is what's the height, the average true range, the volatility day over day of the candles that make up the stock market. What does that tell you as a trader? What I see is a lot of flat melted candles. The only hot candle we had last week, we had Monday, Tuesday, Wednesday, Thursday, Friday. Just Tuesday was a gap, or I'm sorry, Tuesday was a down day. Monday, Wednesday, Thursday, Friday were all relatively flat days. So last week was quiet. The good news is typically the market cycles hot and cold. So after a week of flat, low volatility candles, we got a nice big run. After a week of flat, low volatility candles last week, it's kind of like an on and off switch, the hot and cold. Just like that's why so many gaps failed to run up last week, is because low volatility markets. So we may well see some volatility come in either to the downside if we lose the support or to the upside if we break resistance. The point is, be ready for it. So let's take a look at some hot charts, shall we? Some picks that our members got earlier. ADVM, a nice momentum runner all the way from 5 up to 11. These are, by the way, all worth keeping on the radar for potential moves next week as well. So kind of a bearish engulfing here, so not too excited to buy it unless it takes out highs, but it's been in a big directional uptrend after this bullish engulfment and a nice breakout. Pattern that I've taught traders for decades is the 2 candle approach. We got copycats with their 3 whatever approach, but I originated the 2 candle approach, and that's where you have a small whole real body followed by a large whole real body candle that often leads to additional upside volatility. Like one of my colleagues, Dr. Adrian Manns, wisely says, volatility begets volatility. I remember he said that in a webinar we did many, many years ago. And that stuck with me ever since because he's correct. When you get good volatility, it's kind of like a body in motion stays in motion until acted on by an outside force, to quote Newtonian physics. Well, same thing with their stocks. Directional volatility often is visually clued in by an expanding range in the candle. So you see a small candle followed by a larger candle that often leads to up and away breakout. Another really good rock star chart with that 2 candle approach here is STAR, and this is one that my members had gotten earlier a couple weeks ago, STAR, and it ran up nicely. So congratulations and happy profiteering to anybody who took that and banked big time on it. This guy ran all the way from 860 to 12. And just a reminder, we always use whole numbers as exit targets. Every single trade needs 3 components. Your initial share or lot or contract size, your initial stop, and your exit target. What I like to do when I swing or day trade is use whole numbers or multiples of 10 for longer term swings. In these cheap charts, I'm happy if I buy over 10 and sell right under 11, or buy right over 11 and sell right under 12, or let the whole thing ride as long as it keeps going up. But use the whole numbers as entry points and exit targets. Your exit target on a 90-day chart should be roughly 50% of the overall trading range. So for example, in this chart, the range is roughly $8 to $12. So that is a 4-point range total. So with the 4-point total range, that yields 2 points as an exit target. So that's how I got the 12 exit target for my traders with the breakout that we had right over $10 a share. From 10 to 12, that was the range. So if we buy over 12, where's your exit target? Is it 14 or is it 16? Didn't think I'd ask you math this early on a Saturday, right? But the math behind the chart pattern is eminently more important than the pattern itself, because the pattern is history. What counts is volatility and price projection and trade management, an intelligent, brilliant trading approach. So the exit target on this guy is where? Right, Muir and Damon, yeah, 14. So what that means from a share size allocation standpoint is when you're trading cheaper charts, even as consistent as this, where you only have, say, 2 points of range, you've got to have a P&L profit target. So I like to make at least a minimum $600 to $800 on my swing trades, use a maximum stop loss of maybe $150 or $200. So I got at least a 2 to 1 and preferably a 3 to 1 advantage in terms of the profit to loss ratio in my trades. So what that means to me as a trader in developing a trading plan that's intelligent is if I'm going to try and shoot for, say, $800 and I get 2 points maximum, that means I got to do 400 shares. Now, I'm not ever going to start off with 400 shares. I might just do 200 shares if it breaks 1220, then another 200 shares if it breaks, say, 1280 or 13, and then wrap the whole thing up or tighten up a stop as it reaches 14. And often that will be the top, and it pulls back, takes out the trade, I lock in my profit, and I live to fight another day. A good chart recently, and we were talking about pivots, is American Airlines. Our transports, Uber had been up nicely too. I correctly called a winning trade call for Uber on Thursday for my traders. It shot up nicely. American Airlines had a really nice open range breakout on Thursday. You can see a big ORB went from 3130 to 3260. Bum, 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 bum. Flawless victory. Which is interesting because crude had been up on that day, and usually they're inversely related because the major cost component of airlines and transports is gasoline, of which crude is used to make. So interesting divergence. Anyway, a bull flag breakout in this guy, I like to get the first breakout, usually not the secondary, because the secondary breakout length is usually compressed compared to the first. There is a lot of erroneous information out there when it comes to day trading. These moron kids telling everyone bull flag breakouts to make thousands of dollars. No, bull flag breakout is, if you're lucky, you can get on a scale in or position. I'll use bull flag breakouts to add on to a winning pre-existing trade. But typically when you see an initial bull flag breakout, it's already after the first big winning trade, coulda, shoulda, woulda traded it. So you're late to the party and you're trading with institutional traders that aren't going to give you much profit on a secondary breakout. So if you're looking for good breakouts, you need to be on top of it early. And that's why in my live room, I visually scan starting, what are we at? We're at 10:11. I visually scan starting at 5 a.m. my time, 7 o'clock East Coast time for my traders. And then open the room up usually around 8:35, 8:40 in the morning. So I'm there very early for everybody. Even though 9 o'clock is the official start time, I'm virtually always early. Another good momentum chart for a smaller cap instrument is VER. And this is one that our members got last week, and congratulations if you took it, you're in the money. Trade or no trade. Looks like game on to me, right? We've got a doji-ish type pattern here. I personally don't like buying right under a 10, so I'm going to wait till it breaks over 10, maybe 10.20 before I buy. So if it shakes and fakes out, it's likely to do so during the region right under the 10 whole number resistance. So this is a late cycle breakout. One of the things that my members get access to when they work with me in my live trading room and in Swing Scans is they get to ask me lots of questions, and they do daily, and I like to answer. One of the strategies that we're looking at that's especially effective in our current markets is to look at the delta, or the difference in volatility between early versus late cycle breakouts. What I'm finding in our current markets is that late cycle breakouts usually fake out, or they're exhausted. We're not seeing a lot of sustained runs. Market's been up and down this last month and a half or two. So for that reason, you got to get in early. And that's why so many hundreds of traders, my members, trust me, because I identify early breakouts instead of late cycle breakouts. Does everyone see why this is kind of late to the party? It's like, yeah, if you bought it there, if you bought it here after this big green candle. Remember, 2 green candle approach, small whole row body, large whole row body. You buy the high above, put the stop out below, you let it ride, you're good to go. But does everyone see why this is kind of a late cycle breakout? You're kind of late to the party. It's probably not going to keep running up a whole lot. It's probably going to stall and slow down right under 10. The maturity of a trade should be thought of much like a banana. Why not? I wish I had a banana here. There's green bananas, and there's yellow bananas, and there's mottled brown and yellow bananas, and there's all brown bananas. What you want are apples that are too green versus too sugary and ripe. Like a fresh fruit, a trade has a life cycle, and you have to be able to be on the right side of your trades more frequently than not. And the way to do that is to understand the patterns that differentiate between successful and not successful trades. One thing that I think will really help you is many of you have asked me about how do I get all your alerts and save a bundle? And so I finally, at long last, thanks for your patience. I know Louise had asked about this last year. I'd had many traders for years had asked about this. I have an all access pass that's available for trading the open and Swing Scans. Normally these things are about $97 a month. What's the retail stack on this? If you're to do monthlies on all those, it'd be $42.96. But for you, a low price. Operators are standing by. Just $12.97 a year. So that's a really good value too. I'm a real trader, right? Tax return proof. Done just under $5 million in a single year. I'm the real deal. Anyway, the point is you can save a lot by getting access to all of my alert services for less than half the regular price. And I just launched this day before yesterday. So it's brand new. It's at trademastery.com. All access. I do urge you to register for that. And if you're a cheap person that doesn't have any money, that's okay. It's like Mae West once said, the burlesque queen from back in the 20s. I've been rich and I've been poor, and I like rich better. And I can certainly relate to that. How many of you have been broke as broke AF, and that was kind of like the low point of your life, and then everything worked out from there? I know I remember that was the case for me back in 1993. I'd lost thankfully, my last corporate job I'd been fired from because they said I wasn't a team player. Well, bleh. I went on to make millions, and they didn't. Isn't that great when you get fired from a job and then you know that you're making like 10 times as much money as your boss's boss makes? Boom. In your face, baby. Working for the man, I guess it's a living, but it's better to be a trader and be an entrepreneur. Being independent is a lot better than being dependent on your paycheck for somebody. Anyway, the point is, if you want to learn from top industry pros that can help you potentially turn the corner in your trades, I've got a free event. I'm really thrilled to get an all-star lineup with Tom Sosnoff. When he keynotes at the Money Show events like I was at 2 years ago in Vegas, standing room only crowd. We got like 1,500 people there. So he's there. We've got almost 500 for our turnout so far. Most of my speakers have not yet emailed, so if you're watching, email, please. We've got Tom Sosnoff, we've got Larry McMillan, we got Steve Nissen, Harry Boxer, Tony Turner, Barry Burns, and myself. Good people actually worth learning from. And our presentations are all just, the neat thing is they're just 30 minutes each, right? So we got quick, focused, action-oriented. Give me your best stuff is what I urge the world's top trading people to learn from. So register now if you haven't done so already at worldstoptraders.com/summit. Okay, so that's 2 calls to action. I know typically from marketing, I've done millions in sales online. I'm very successful. You should only have a single call to action. But I think you're smart enough to take action on both. So don't prove me wrong. So tradingsuccesssummit.com will get you here, or if you want to type out the long one, worldstoptraders.com/summit. Get your free seat now, right? Click on that. Save your seat, unlock new trading strategies, etc. And of course, the other call to action, we're going to look at a couple more charts here in just a minute, so hang on, is the All Access Pass I've thoughtfully put together. Because the reason I did this, I'll tell you why, is because, and tell me if I'm wrong, but often when you answer my question as to what kind of trader you are, most of you say both, right? So for that reason, rather than spending a lot on each of the different services, I'm trying to migrate my business to put it all under single subscriptions to simplify my business, right? Instead of having to choose, do I do Trading Open or should I do Swing Scans? Do them both for half off, right? So that's at trademastery.com/all access. Anyway, back to our charts. Last thing I want you guys to keep an eye on is oil and gold. I like to play Nugget, which is my favorite gold instrument. JNUG is cheaper, gives you a similar chart pattern for about half the price, but Nugget's better. It's superior from a volatility standpoint. So that's why I like Nugget for swings and intraday trades. Dust is the opposite, right? It's the gold short. Now this one may be good for pivot. Its trading range had been, regression line would be around 23, right? So that'd be the ATR, the average price action on this, maybe APA, up near 23. It sold all the way down to 15. Now I do not see any bullish candlestick patterns. I see no hammer. It's not hammer time. I see no bullish engulfing. I see no sign of buyers coming back in yet. All we've got is price action. Use a minimum of a 3-day high turnaround for a long play after a sell-off. That's what I'm using. So minimum recovery zone. I'm not going to jump the gun and get in early and then get shaken out. Earliest I would buy dust would be somewhere north of 16.5. All right, so that's the approach you want to take. I like to arbitrage play these against each other when I'm day trading. I'll trade dust versus nugget, or for our oil plays, I like trading, I don't trade these two guys. I trade UWT frequently and I trade DWT. SCO is also a way to play short crude, right? You can see a bullish engulfing down here, and a tweezer bottom, almost tweezer bottom, a breakout above the moving average, another breakout above the moving average. We're up here in Chop City. It's like, hey, wake me if it breaks over 23. And when you are looking for charts in a stock market that's been kind of a parting thought here, it's been relatively quiet, you really want to find good rock star charts that have clean, consistent breakout strength from a directional volatility standpoint and are more likely to make you money. So keep it safe, keep it small, do it the right way. All right, I'm out. I've got Swing Scans coming up in 10 minutes for all of you who are Swing Scans members, and welcome to all of my new Swing Scans members. A lot of people have been joining that and the live room lately. So check out the free Success Summit coming up this coming Friday, the 21st, with Tom Sosnoff, Larry McMillan, Steve Nissen, Harry Boxer, Tony Turner, Barry Burns. I even memorized all that, and myself. I hope that you guys have a fantastic weekend. You know, either you're going to crush Wall Street or Wall Street's going to crush you. And if you've been on the wrong side of your trades and you've been losing more often than not, then start doing things differently. Learn from people that actually know what they're talking about. And by the way, if they're under 40, they don't know what the blank they're talking about. Am I right? For the most part. There's like one guy who I think is really smart, Sasha, but most of the people on YouTube that are under 40 don't know jack diddly squat. So listen to those of us who are in our middle and later years that have decades of experience as active traders. We're the kind of people that you can learn from, both perspectives, insights, as well as technical patterns and risk management to stay on the right side of your trades and hopefully make bigger winning trades more often a way of life. Dun dun bum bum. Have a great weekend. You guys have been great. I will read all your comments. And again, just hey, thanks, Chris, and Ahmed, and Mira, and Adam, and Long. And sorry I can't answer all the questions. Oh, thanks, Adam, saying thanks again, privilege to learn from you. Well, it's a privilege to have you guys here. I know your time is valuable. It's one thing I respect about what I learned from Tony Robbins, and he said the same thing: is you know, your money and all that kind of stuff can be replenished, but time cannot be rebought. No matter how wealthy we get, we can't buy more time. We can lead a healthy lifestyle. I exercise daily and have been for years. Try to, you know, I don't drink. I try and stay healthy and all that kind of stuff. But time is of the essence. So I hope this has been a great use of your time. Make bigger winning trades more often. Join my All Access Pass. Again, it's at trademastery.com/all access. And there's a link on the front of the Trade Mastery site. You got to scroll down a little bit. There's a big button that said new All Access Pass. So I'd be thrilled, I'd be honored to be able to teach you what I've learned from thousands of real money trades. And we are going to wrap it up here right now. Again, I've done I do not know what the number is right now. This is as of May 18th. So I'm sure I'm well over 5,000 trades now and probably over 20 grand in commissions paid. I do thousands of real money trades to teach you and also to teach myself to learn the difference between all the little tiny stops I take and the occasional wins, and what's the difference between the two. And that delta, you know, I do all this grinding and trading and testing out patterns for you, so hopefully you don't have to do all the expensive commissions and small stops that I've done in pursuit of knowledge to help the world's traders. So learn from my experience. I am the real deal, widely imitated, never duplicated. You guys have been outstanding. Have a peaceful, safe weekend. Remember, a lot of people out there impaired driving, so be safe out there. Be defensive drivers. That's what I tell my wife. And you guys take care. So thanks so much for being here. It's been an honor. It's been a real privilege to be here and have so many of you with me. We're still at 5637. #1 webinar in the entire trading industry. I've never seen anybody generate this kind of pull, and it's thanks to all of you. So tell a friend, stay safe out there, and I'll see you guys next time. Bye for now.